Welcome back. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We are having Feroz Aziz, who's going to help our viewers today with their financial portfolio. But in case you're watching our show and you want to send us your query, you can WhatsApp us your query on 865-797-4571. You can also email us your query on themoneyshow@etnow.tv. All right, so we move on, and Feroz, we have our first viewer, Sachin, online with us. Hi, Sachin. Good evening. How are you doing?
Good evening, ma'am. I'm doing great. What about you?
I'm doing good. Thank you so much. So you are from Pune, and you want to have a corpus of 2 crore for retirement.
Yes, correct.
How much time for that?
Minimum 50 years and maximum 20 years, ma'am.
All right, you're 35. You are investing somewhere? Do you have
35.
You're 35, right. Do you have a portfolio already?
Actually, yes, I do have Mirai asset, large cap.
One second. You have not given us these details, right? I don't think Feroz has these details.
No.
Okay.
We haven't given you, ma'am.
Yeah, so you'll have to be slow in reading out the names. Okay, Mirror Asset Large Cap.
Then Franklin India Equity Fund.
Okay.
Then Aditya Birla Growth Option. I don't remember the fund name because I don't have it handy. And HDFC Mid Cap.
Okay. And?
Growth. These are 4 funds majorly I have it.
These were 3, right? Mirror Asset Large Cap, Franklin India Equity, ABSL Mid Cap.
ABSL and HDFC Mid Cap.
HDFC Mid Cap. And you are investing how much?
In HDFC, I invest 2,000.
Okay.
ABSL, I invest 1,000. Mirai Asset Large Cap, 3,000. And this one,
Franklin.
9,000 I total I invest. Franklin, 2,000, ma'am. 9,000 total I invest, ma'am.
Okay. And 2 crore is the corpus calculation, right? Have you counted in all the factors and you've come down to this figure? That's all you need?
Yes, ma'am. For my retirement as well as for my child education.
Will that be enough?
Yes, ma'am. Because I'm thinking of sending for the higher education. That will cost somewhere around 85 lakhs to 1 crore for the masters. This is what exactly I currently is.
You are talking about 10. You are talking about 10 years, right? 10 to 12 years.
Yes. Yeah. Now from now it will be 13 years.
Okay. So 13 years, 85 lakhs.
Yes.
Got it. All right, Feroz, any other information that you want from Sachin?
I think this is good pieces of information which we can give some at least thought-provoking inputs. One is, of course, 85 lakhs kind of corpus for a higher education seems right. It's incorporating inflation of higher education abroad and also the rupee depreciation. That's point one. You not having a global fund in spite of having a large corpus of global expenditure can be rethought. That's point two. Point three, to accumulate a corpus of 2 crores, if that's what you'd said initially, you require not just 9,000. You will require a lot more, close to 32,000, 33,000, because 15-year period, if you compound your money at 14%, it just grows to 2 crores only if you have a 33,000 rupee SIP, still assuming a 14% growth, which I think is a fair assumption over long periods of time. Nifty delivers 11-12% median return, plus 2-3% of the active fund management. Then coming to the 4 schemes you own, of course, firstly, the learning is that I think you should always remember the scheme name. Like growth is a subcategory. So knowing your fund, at least the name of it, understanding which category it is, who's the fund manager, is critical. So of course, for the 3 funds you actually stated very clearly, the Aditya Birla fund, you were not able to recollect. It's always good for each viewer to understand the scheme. If you're putting your hard-earned money, you have to go do some homework on a weekend, and you'll get enough public domain information. Chirag Setalwad, HDFC Midcap, has done a great job. You can continue with that scheme. Even in spite of the size, Chirag Setalwad been able to beat his own benchmark, hands down. He's been the HDFC for about 19 years. So that's a definite hold and add to. Second is on the Mirai Asset large cap. It was there a part of our model portfolio. We exited it about a year and a half back, about a year quarter back, and that's delivered negative returns, almost about -2, -3% in the same period where our model portfolio has delivered about 3% positive. So that's point two. So that's one thing which goes on the annual for an exit. I'll tell you a few schemes which you can definitely consider to exit: HDFC Flexi Cap, SBI Contra, SBI Large and Mid Cap, Quant Active, ICICI Focused Equity, Kotak Emerging Equities, HDFC Small Cap, ICICI Dividend Yield, and Invesco India Small Cap Fund. These are from a prospective basis than a retrospect basis recommendation. So you could probably, if you're going to scale it up to 18, 20,000, you may want to add some of these portfolios, if not all of them.
All right, Sachin, is there anything that you want to ask Feroz?
Yeah, I have one question. Okay. Is it okay if I top up a Franklin India Equity Fund and HDFC Midcap Fund on a quarterly basis, maybe by 20,000-30,000 in each fund? Will it help me, or you don't recommend such a practice?
Feroz?
To my mind, I think, see, 4 schemes are fewer. Okay, you have the capacity. If your objective is 2 crores, you will have to have, and if your SIP amounts need to go up, or if you have accumulated corpuses and you might want to top up and buy some more units, I think you should expand your portfolio. That's the first suggestion. Most often than not, we are telling investors to compress their portfolio. It seems very contrary to what we've been telling, but you have just 4 schemes and you have a mountain to move. So please try and get to 7-8 schemes. Don't top it up there. Have some more variety. Everybody has a different strategy. Like I've given you Quant Active. It's not done too well for the last 1 year, but Quant as an AMC uses a very, very different principle: momentum, risk, and valuation. Sandeep Tandon is the CIO and the founder as well. ICICI Focused Equity, it's a different principle. So try and get to 7-8 schemes is why I read to you a laundry list of them, so that you can look at the ones which you are in the category of. Try and add other categories. I think some of them, large and mid cap, you don't have. So dividend yield, you don't have. The categories which you don't have, try and add them and go to 7-8 schemes. Don't top up is the pointed answer I'm wanting to give you.
All right, we move on. We have Meet online with us. Hi, Meet. Good evening. How are you doing?
Hi, I'm fine. Good evening. Thank you.
All right, so you've been investing since October 2021.
Yeah.
Okay. What are your funds like? Okay, you have 10 funds. We have the details.
Yeah. Yes.
Anything else you want to add to this question, or we can directly go to Feroz? Yeah.
Yeah, we can just go and start with these 2 questions
Sure.
and probably basis. Yeah.
Sure. Okay. Feroz, first question on the fund mix.
The fund mix has a lot of interesting stuff, but boring sometimes makes more money. Or at least reduces the risk, and in turn, the risk-adjusted returns shoot up dramatically. You have a technology fund, you have a natural resources fund, you have a development world index. Of course, that's an innovation which was worth, is why I'm reading that out. It has several countries, several geographies, several currencies. So that's one of the best fund of funds you could have bought from a diversification standpoint. But still, I would say that unless your goals need it, don't do it. Tata India Pharma Fund. So point I'm trying to get to is, don't have sectors as a specific fund. You can definitely look at sectors provided you are doing it as a full-time job to manage your mutual fund portfolio. Getting a sector right is not just the game of entry, but also an exit. So using a long-term platform for something which enter and exit may be an oxymoron in itself. So please shed all your sector funds. That's my belief, that if you want to beat Nifty by 2-3%, you can do it at a lot lower risk and higher probability. So Canara Robeco Blue Chip is a great fund. Kotak Small Cap should be held. PGIM Mid Cap can be held. SBI Contra is a great fund to hold. It's a part of our model portfolio. The other 6 funds which you own, I would definitely want you to simplify your life and get into the schemes which you read out to the previous caller as well. I'll reread it to you. ICICI Focused Equity. Shankaran Narayan himself looks at this portfolio. Of course, there was a small fund manager change, but the CIO itself is paying attention to it. HDFC Flexi Cap, Roshi Jain is a fund manager. She used to manage Franklin Blue Chip. She's done a great job. HDFC Small Cap, Chirag Setalwar is a fund manager. SBI Large and Mid Cap is also a good fund in a good category. Quant Active, ICICI dividend yield, and Kotak Emerging Equities. Kotak Emerging Equities has become a large fund, but Pankaj Tibrewal, who's been the fund manager for ages, and this has been part of our model portfolio for 5.5 years. So I think it continues to do well.
All right. What about debt funds?
So if you look at the debt funds, Kavita, I don't know whether I have the details of the debt funds which he owns, but if there is
So
some...
he's asking whether he should be including a debt fund. Is there any requirement or need in the portfolio? You think so?
Yes, see, Meet, when you look at an asset allocation, you have to look at the bird's eye view. You look at your full portfolio, add all your assets, write down your wealth, EPFO investment will come into picture, your FDs will come into picture. So asset allocation cannot be done at a mutual fund level. Do it at your overall balance sheet level. Like companies make their balance sheets, assets and liabilities. It is you are duty bound as investors to make a balance sheet. Make that, and if there is no other debt, of course, it's a screaming buy. Debt has to be a part of one's portfolio. But if you already have debt in other vehicles like PPF, EPF, or any other vehicle for that matter, a tax-free bond or a NCD, all that, please see, that's the suggestion to each viewer. Look at asset allocation at a file level or a overall portfolio level. If you wish to buy some debt on the debt fund side, then comes after Section 50AA was included. You have to look at the tax merit of it. Currently, FDs are also very attractive with 7.5%, 8% rates. If the tax advantage, if you're on the highest tax bracket, then still going in for a FD would still make sense. If you're in the lowest tax bracket, so taxation has to come. So two debt funds you can consider. IDFC Gilt 2028 index fund is one of the cheapest Government of India bond, which can give you about 6% post-tax, depending on the tax slab, somewhere thereabouts.
Is there anything else that you want to ask Feroz?
Yeah, so
Sure.
thanks, Feroz, for your input. So like you mentioned for the debt fund piece, yeah, I'll take a complete portfolio view because, yeah, I have investments in EPFO, I have investments in PPF and even NPS to some extent, which I've, again, put it more towards equity, but yeah, corporates which there as well. And like you mentioned to my first question, I just wanted to add that the 4 schemes that you mentioned out of the 10, I can continue. Should I increase my allocation in those, or just add some of the money which I'm exiting from the other 6 schemes in the other schemes that you mentioned?
So I think the schemes which I mentioned, see, you have to try and scale up your portfolio to 8, 9, and then start thinking about top up. So if you exit those which I asked you to exit, then you're left with only 4 schemes, unfortunately, or fortunately. Okay, and time will tell that. So point what I'm trying to make is have a 8, 9 size. Your current size is perfect. If you're shedding something, add equal number of schemes. Make sure that you have lesser intersection with respect to categories. If you have different categories, your probability or odds of beating the benchmarks go up. So having said which, don't top up till you've got back to 8, 9 schemes if you're exiting the ones which I asked you to consider an exit for. Meet, I hope that answers.
The Tata one and the one which ICICI Prudential. So all those I think I can exit, right? Those 2 and...
Yes.
Yeah, other also. So Quant Infrastructure Fund, should I...
All right, so I think that will be an exit. I mean, you can again hear whatever Feroz has recommended you on the YouTube. We have the show uploaded over there also. But then there's a breaking news coming in right now.